Okay, very good morning. It is Wednesday the 23rd of May. I'm just going to get straight into it and start talking about some of the moves and why they're occurring this morning. So some quite clear risk-off activity. You can see this quite prominently across the different asset classes. You got Centre here, the DAX under pressure. S&P likewise following the lower close on Wall Street, a negative tone overnight in Asia. Fixed income, T-notes and bunds on the front foot. The US 10-year back above a 119 handle, up about 12 ticks. Gold also catching a bit of a bid. So going to discuss a couple of these things. I'll try to be as concise and prompt as possible, and then I'll hand you over to Sam. Just a quick look. We've just had some German, this is the flash May German manufacturing PMI. It just came in also a little bit weaker than expected, so just helping this negativity in the euro-dollar pair. We've just had a brief test on the weekly low that was printed on Monday, and this lines up with around that S2 level, which is just holding some of this downside, at least for the moment. But the dollar is moving higher, and consequently cable also has been under a bit of pressure. We've already broken that low print also seen from the same point on Monday morning. And we've also gone below the 134 handle, a bit more longer time frame. Obviously looking at this really quite definitive trend that we've had in cable since we broke through some quite key levels a few weeks ago amid the kind of dovish turn from the Bank of England and some of the economic data slowdown. So downside on a kind of more broader target, it's really that 133 handle that I think's quite an interesting one. Again, I'll let Sam go into this in more detail, but just given some of the support points, the various areas of resistance in which that level has had, I think that could be quite significant. And just given the way the markets moved to open the markets open in Europe this morning, I don't think that could be ruled out even on an intraday basis today. So other things with this currency move, it's worth keeping an eye on dollar yen as well, because if we're going to see a bit of a follow through in the moves that are already occurring, just check that out. Dollar yen just really snapping through the 110 in the last couple of minutes here. So that's likely to exacerbate some of the risk-off nature of these moves, further dollar strength as some of these pairs go through the kind of significant barriers. Is likely to contribute to an extension of what we've probably already seen occur this morning. So just quickly to it, why is this happening? Well, in summary, I mean, I'll go into it in a bit more detail, but you've got a renewed kind of concern about this, what was a trade truce. If I look at the S&P here, this is the S&P future I'm looking at. This was obviously the gap up that we had at the recommencement of trade when Treasury Secretary Mnuchin at the weekend said about, let's have a trade truce with China. The markets received that well, and we gapped up quite significantly and we rallied thereafter. However, the overnight news has been that basically Trump has expressed dissatisfaction with the Chinese situation. And so if you actually look at where we are to where we were at the market close from the end of last week, we're exactly to the tick back to ground zero, if you like. So all of that optimism has been taken back. And then likewise in the European move, obviously the DAX was closed on Monday for that public holiday, but again you've had a break of the weekly low, or I should say what would have been the low from the end of last week. That was fairly significant as well, just giving that low point there and some of the previous points of resistance that we had seen. And so that's exacerbated the move. We briefly broke 13,000. We found a bit of support around the kind of consolidation that we had midweek from last week for the moment. So Trump is one on a, let's say, the optimism quickly fading on the China and US trade front. In addition to this, you've also had US President Trump expressing pessimism about whether the summit with North Korea's leader would take place. Now, again, I don't think these are on their own singular type reasons to just hit the sell button, if you like, but as a culmination, if you like, of everything coming together, the kind of the geopolitics has just taken a bit of a turn on the negative side once again. So you've got breakdown in North Korean relationships, a breakdown or renewed dissatisfaction between US and China trade talks, and then the other thing that a lot of people are looking at the moment is continued pressure in the emerging markets, and particular emphasis has been placed on Turkey. Now, if you haven't been following this very closely, then you might be thinking, well, what's going on in Turkey? Why is their currency getting hit very hard at the moment? And so it's leading to basically a focus on potential contagion in some of these countries. Now, just to give you an update on why this is happening and why Turkey's come to the forefront, it comes after their president Erdogan's comments, where last week he said he intends to make or take, I should say, more responsibility for Turkey's monetary policy if he wins an election next month. He has long called for lower interest rates and a move that could exacerbate inflation and the lira's slump. And so it's also led to some concerns of the central bank not coming in to step in and prop up the market, and it's led to the lira getting slammed at the moment, down over 3% in overnight trade. It is one of the world's most volatile currencies. Now, what this has led to, and this is what some of these articles are referring to, is you had a bit of a pop in price action. You can see that on that initial move there, and they're talking about margin traders driving the Turkish lira's slump. And so what this is referring to is in Japan specifically, where interest rates are so low, and they have been for such a long time, i.e. zero, then you get this kind of hunt for yield, and with Turkish bonds having yielded around 14%, irrespective of double-digit inflation, expanding current account, budget deficits, things of that nature, which would be fundamentally negative to invest in that particular country, the hunt for yield, i.e. to get a better return on your investment, has meant that a lot of these Japanese retail investors often look beyond the actual economic fundamentals. But obviously when we get to a point when the trade goes against them so much, you get a margin call and mass exodus out of some of these positions get unwound, and you tend to get very violent moves. Now, when people talk about emerging markets, this starts to spell some concerns then about quite large size FX moves, because other countries that could particularly be in focus, so things like South Africa's rand, for example, where they've got inflation moving quite sharply on the upside, you've got a worsening fiscal deficit situation as well. This could lead to similar type movements, and then we go back to where we were several years ago during the depths of the kind of sovereign crisis of contagion is quite a key word, and what this could result in. So that is also making people nervous. So it's a combination of really a couple of different things all materializing at the same time that's leading to this renewed risk-off activity to get the markets underway this morning. So yeah, not one single headline, so to speak, but kind of a collection of different things. To give you a bit of an idea with the Turkish situation, how it's kind of capitulated almost, here's a chart of the Turkish, or the lira per dollar, to give you a bit more of a picture. So the weakness of the lira here evident, and it has really picked up pace over the last 24 hours. This is then, against the dollar, a fresh all-time low that we've seen overnight. Investors have been calling for an emergency rate hike by their central bank to stabilize their currency. Obviously that would mitigate then the currency downturn, and also would help. Their inflation rate is just shy of 11%. But Erdogan's continued to voice his long-standing opposition to higher interest rates, and because of what we just said, he wants to take more control if he wins elections next month. This is what's causing these concerns. So hopefully that makes it a bit more clear of what exactly the situation is. Okay, so I'll leave the rest to Sam, because obviously technical levels will be significant to identify key areas to the downside in this kind of type of price movement that we've had so far. But just to round off some of the other headlines to be aware of. We have had the API crude oil inventories not going to dwell on this too much because they're not particularly exciting. But we had a crude drawdown of 1.3 million, wasn't too dissimilar from expectations. Cushing was a draw of 822,000, gasoline a build of 980,000, distillates a draw of 1.3 million. Has there been a lasting impact in WTI crude oil on the back of this? Well, no, so I'm not going to talk about it any further, but I will revisit those numbers ahead of the DOE figures we'll get this afternoon. Otherwise, one of the other things on the calendar events to be aware of today is, of course, later on this evening. But again, I'm not sure how much of a big issue this is going to be. This is the FOMC minutes, so not the actual meeting. This is the minutes where divisions among Federal Reserve officials over the yield curve and inflation are going to be scrutinized. So if you remember in the statement that we last had from them a few weeks ago, there were small tweaks to classify prices as having moved close to 2%, which has been the case. And the word symmetric with regard to the inflation target was used or introduced. So again, as per usual, it's going to be the focal point on their discussions around inflation to get a bit more of a feel for their forward-looking policy path. That's going to be the kind of the most impactful thing for markets. Data-wise this morning, if we just quickly drop back to the calendar, we have had already these French and German flash PMI numbers. Just to give you the flavour, again, as I said, German was a little bit weaker on the manufacturing and on the service. On the French number, it was actually stronger manufacturing, weaker on the service number by quite a considerable margin on the latter. Looking further forward though, it's quite an interesting day for the pound actually, and obviously the pound's already broken a fairly significant support level this morning and trades a 33 handle now with the dollar strength that's been materializing. But today we get UK inflation numbers, and obviously this is kind of one of the top tier economic indicators that we look out for the UK at the moment. And just to give you an idea of what the current environment has been, has led chiefly to a dovish turn from the Bank of England, and as we were just looking on a longer term cable chart, quite a substantial repricing lower in sterling dollar, and that's come as inflation has dropped quite dramatically from 3 to 2.7 to 2.5%. Now the median expectation today is for the year-on-year CPI to remain at 2.5%, so to remain constant here from last month's figure. However, there is a range, got a range, I think it's 2.3 on the low to 2.6 on the high. Looking at a reminder of what a few of the analysts at DB, Deutsche Bank, was saying earlier in the week, they did note that the sugar tax levy has come into effect and potentially it could have an upside impact onto CPI in April. And they also noted that April sees the first of many energy price hikes from the big 6 energy retailers. However, the timing of this survey, it might not encapsulate that. But potentially, they could be upside things to contemplate. However, even if you did get an upside inflation reading with these two factors, let's say, being aware of them, does that then just act as just, well, even if inflation is up and we've turned from this trend lower, well, you can explain that because of these two one-time effects. And so in reality, a 0.1 or 0.2 beat doesn't look as strong as it might appear on the surface because it's elevated from these one-time effects, which will fade out in the subsequent months thereafter. So just something to bear in mind, that's all. Other than that, looking beyond the CPI numbers, you then go into the afternoon, new home sales, you get the US market manufacturing PMI, so the equivalent of what we've just seen out of Europe, and then you've got the oil inventory numbers as per usual at 3:30, and the FOMC minutes this evening at 7 p.m. On the Brexit side of things, you might have seen old Bojo back on the scene. I think he's in Brazil. Seems like he wants to be on the other side of the country to call out Theresa May and say, get on with it. Give himself a good clear few miles distance from the PM before he starts to up the ante on the Prime Minister. But he's been calling on the PM to just get on with it. So continued kind of fractious nature of these relationships in the senior Tory cabinet. And this morning, kicking off really in the next hour or so, we get Brexit ministers appearing in front of Brexit committee. They're going to speak on the progress of EU exit talks. So be interested to see if they can talk for more than 30 seconds. Let's see. Obviously, customs union, that's going to be the thing to watch. Is this going to be a market-moving event? Well, no, because as we know, there isn't really much in the way of concrete progression at this point, and certainly I don't think these two Brexit ministers are going to break the latest scoop on the customs union, but just something to be aware of as we go through the morning. All right, I'm going to leave you with that. I'm going to hand you over to Sam, let him have a look at the charts a bit more technically, but as I say, you've had a risk-off morning. However, I would be of mind that this is Europe, this is how market prices tend to function. We have quite a knee-jerk, aggressive opening reaction to these negatives, exacerbated by some technical breaches, maybe stops being run, and then, as we're seeing at the moment, a little bit of rationale returns. What will be key then is, if it is quiet, Xing out the UK volatility on CPI, then as we get to the US session, do we get a second phase move? However, don't forget, US did finish lower yesterday, so have they already factored in these variables? The only difference here, I would say, is the lira and the EM situation on those currencies. The Trump stuff, they already know. Okay, guys, have a good day. See you in the chat room.
Hi guys, good morning. Yeah, just to follow on from that, don't feel like just because the markets are moving you have to be in a trade. Plan as much as possible. You will find, and probably more for the newer guys on the course, the less a trade is planned, the worse it's going to be. You know, stick to your plan. Nothing wrong with not being in a trade. You know, stick to your ideas and strategy. Does the risk reward make sense? Have you got a good reason to get in the trade, or is it just something that, you know, has come as an idea a minute ago and now you're just going to click buy or sell because you've seen a green or red candle? Really, you know, try to think about the process and stick to your strategy. If you plan a trade and it doesn't work, nothing wrong with that. You know, if you've really thought it through, nothing wrong with that at all. Having a look over at the euro, obviously we've had the dollar start to strengthen as well again today after yesterday's sort of, well, we saw the weakness in the morning. Just seen S2 and the low of, well, the previous low of the week acted as relatively good resistance, and we're sort of coming off that level again now. I think obviously if you weren't in that trade, nothing wrong with that as well. If it was to come back up, just look at that on a lower time frame, I think you would, you know, obviously be targeting near the lows, but you wouldn't probably want to take that again. If we were to push on, you've got the previous lows of the day. That could be half interesting, but have you got a strong level for the stop? Probably not. So just looking a bit higher up, key areas of resistance obviously from the morning. Not to say that we're, you know, going to get up to those points, but obviously you want to take on the sort of the best setups that you can and not go sort of chasing the market, if you like. Obviously you've got data coming out in a bit, or that's going to be quite important, especially for UK. So having a look over at that, you've got the previous low of the week, again similar for euro, that we had broken through. And if we have a look back on the lower time frame to see how we did react, you can see we broke through, then came back and actually got a bit messy. So the pound between sort of S1 and S2, you know, I wouldn't really be too tempted to jump in now, especially considering what's coming up. In terms of levels that we could go to, if it was a continuation of this trend, which you can see really is to the downside, obviously your longer term charts, and you're looking at levels from December really, and then obviously a bit lower down, 133 on the futures, not too far away if we were to get through that as well, and other levels of support perhaps for the rest of the week. Aussie dollar as well, obviously with this dollar strength has been coming under pressure, having had a pretty good couple of days, and we're sort of back into that sort of consolidation range that we had been in for, well, I'd say about a month really. Probably not the best market to be looking at Right now, I'd say to look for continuation. I think there's not the best place in the world to have a stop loss or anything. I think if we were to get down to the lows that we had around on the 17th, 18th, sort of a range bound long wouldn't be the worst idea in the world, I think, for that pair. Obviously, with equities coming down, the yen has been strengthening. Key levels coming up, or actually are we just about to hit those that we had from the 16th there? You can see quite a key level, not just on that week. And let me just move this chart around and get the rectangle. You can see previous highs and then the lows that we sort of broke through and came back on the 16th, so the 10th and the 15th, and actually another level that you see on the second there. So key area to bear in mind for dollar yen if we were to get a continuation of that as well. Just going to have a quick look over at the DAX, which obviously pushed down quite significantly this morning, and you've already had a bit of a bounce from there. Didn't quite, I would say, make the 17th low, but you can see that and S2 has provided a bit of a bounce from that level. With the DAX, obviously, the price can easily, end the day back up towards the pivot. I'll just, it's a tricky market for the best of times. Low of Monday has worked well as a resistance for now. I think if it was to come back up to that, even though you had low of yesterday in the mix as well, I think I'd just be a bit careful about wanting to take that on as such. But keep an eye, obviously, if we are to get a continuation, and then you can get a break through the lows, and then obviously the lows the 16th could come into play. But at the moment, just between the low of Monday and S2. Gold this morning been a half tricky one, really. Obviously the dollar strength, but then equities moving lower as well, when we're pretty much exactly where we opened the day. So better markets to be focusing on, I would say, for now. Obviously the 1300 handle not completely out of the question right today on R2, but before that R1, yesterday's high, and then the lows that we've got around S1 sort of containing that range. And to be honest, I think I'd only really prefer a push above or below, and that might not happen if yesterday's sort of range is anything to go by. FTSE obviously coming off those highs that we saw yesterday, all-time highs, one to focus on as well. I think for a sort of a medium-term trade, short coming soon won't be the worst idea as well. I think you might see the pound over the coming, which is the chart here, the CFD not the best one to look at, but the pound, I think you might see a bit of a consolidation and push higher soon, and then FTSE, I think you'll have a bit of profit taking around here. We could come down a bit lower, but that remains to be seen. Oil, we'll have a quick look at. Obviously you've got the DOE coming in later. I know there's a decent trend channel on here. Just get the lows in play now. We're not too far away from that S1 and bottom end of that range, of the trend. Obviously, always careful on the Wednesday. We'll have a quick look over at the dollar yen as well. We mentioned that important area, and we're in the mix of that now. A bit of a pop through, really sort of testing that level now. I wouldn't be going too aggressively on the short here, though it is a strong level. Obviously, you have a few stops below there, but key level for the yen, one to I'd say be sort of looking at now, focusing on as well. Dollar just coming off dollar index is coming off those top levels. Obviously, got data coming out soon. But I just want to reiterate what I said at the beginning. You do not have to be in a trade in these markets. More often than not, new traders will probably lose money in these ones where they're chasing. They feel like, because the markets move so much, you want to be involved, you want to get in and trade because you feel like you've missed out. Absolutely nothing wrong. Stick to the markets that you like, the setups that you want. I wouldn't go in and trace just because the DAX has come down so much. All right, I need to have a bit of that. It's not the case. It might be that you wait all day for the S1 or the pivot to come back in, and I mean, you look at Euro for example yesterday. The best trade to continue the trend came in. Where's the Euro? Using the sort of the highs around that we had on the 18th. Pound was similar. in the fact that we pushed on, and you know the short similar sort of high of the 18th afternoon, and you know wait for, you know, be patient is what I want to say. Any questions about the charts? Obviously, please you know, do get them in. I can see Yanis, you're looking at the that yen as well. So key level for the yen or dollar yen, whichever way you're looking at it, coming up right now. Are we in the chat for the rest of the day? I hope you all have a good one, and be patient would be my advice.